What do you think is the real driver that's been pushing house prices up in New Zealand? Many people have different theories on this. From what you've seen, what would you put it down to?
Well, it's not just New Zealand. I think in most kind of modern housing markets, developed housing markets, I would say the number one driver, which is not talked about very much, is actually bank lending. I've done quite a bit of research on the U.S. market here in New Zealand as well. And a pattern that you'll see over time is willingness of lenders to ladle out increasing amounts of debt on the same nominal amount of income. So borrowers would go from, say, like right now we have these DTIs, debt to income limits, that are stopping some of that. But you could look at those ratios and some of the data I looked at the U.S., you would go from DTIs of 3 times, and over a course of about 30 years, they'd be more than double that. So you have this willingness of the lending sector to give an increasing amount of debt. And it's a bit of a catch-22 because you think about it going, well, the banks are just lending whatever is need to be lending because house prices are where they're at. But when you do analysis of causality, you see that it's actually that increased lending into the market that is pushing prices rather than the lending just reacting to prices.
So we can borrow more against our incomes, and then we end up going to an auction or to buy a home with more money, but so does the person next to us. That naturally pushes up the purchase price because we can afford to borrow more. So we think that we're, buying these houses that are a lot more valuable, but really we're just creating a lot more banking credit by competing against each other with the same rules.
Yeah. So, and I don't want to bore you too much with theory and stuff, but
Do it.
okay, I'll try. So I teach my students value theory, and this goes way back to a guy named Marshall in the States. Actually, no, he was British. Sorry, but anyway, he looked at various things. Some things you'd recognize in terms of desirability, utility, economic theories. But one thing that Marshall put out there was what he referred to as purchasing power and the ability of the community, so the participants in a market, being able to have enough funds to be able to bid and pay for whatever products or services they need. And I think with the banking sector continually ladling more and more credit into the market, that's just created this additional purchasing power. And with that, I mean, you could imagine how much money do you have in your account? I mean, how much money do people have kicking around here on the table? Here you have some coins. We don't have much money. We need to have bank credit to be able to purchase assets like housing. And if banks are freely pushing the needle and they're competing with each other, and that's a big dynamic, is they're trying to compete for market share. And one thing I explain to my students is not only do banks compete on things like interest rates, things like cash back, incentives, but they also compete on how much they're willing to give a borrower to go to that auction and to try to bid. And they know as a borrower, if I am getting 200 grand more capacity from this bank, even if it comes at a little premium on maybe interest rates, I'll probably go with that because I'll be able to then open the scope of what I could bid on and what I could win at an auction.
I see. So the house might only be worth, let's say, $1 million, just to use a round figure, and then we know that we've got potential to borrow 1.2. We only really want to pay 1, but because someone else bids to 1 million, then I still do have access to and can service debt of 1.2. I'm going to bid to 1,050,000. Next thing, it's being sold for 1.2, and I'm basically tapping out based on how much debt I have, and can service, not what the actual market value of this property is as such.
Yeah, and it's, a lot of people will use mortgage brokers, for instance, and that's a big thing a mortgage broker will bring. Is they'll say, hey, you go to bank A, and they'll give you a little bit more. You go to bank B, yeah, they're pretty tight at the moment. And so that's going to influence even which lender they go with.